question often arises, what kinds of companies seek angel investment? So let's leave aside the big demographic answer to that question, which is really that a wide host of companies across industries seek outside capital for growth to help tide them through a difficult time. So let's put aside that issue for a second and focus on a key distinguisher of between companies seeking outside angel investment capital, companies that we'll call the one and done types of companies, and companies that are out to seek outside investment in a series of investment rounds after this initial angel investment round. So let's take these one by one. So the one and done companies are companies that seek a round of capital and have a business plan that gets them to operating cash flow to fund their business after that one round of capital. So the business models are really based on getting a bit of capital, get the company started. Oftentimes these aren't as tech-heavy businesses. They tend to have somewhat less risky business models, and I would argue healthier business models, because one of the best indicators of the health of a business is cash flow, and companies that need to continually seek outside capital to meet their cash flow requirements are almost unhealthy until proven otherwise. So the one and done companies, one round of capital, usually in a startup environment to get them off the ground, that's that category. Now the other types of companies that are ones that are seeking a seed round of capital with the goal of raising some money, getting to some milestones, and then going out and raising additional, usually venture capital rounds of companies, are ones that tend to be more tech heavy, tend to be companies that will fall within that rubric of the types of companies that venture capital firms normally get involved with, which are similarly very tech heavy businesses, tend to be riskier business models, and ones that really over the past 10 years have not performed all that well. What we like to look at here at Growth Inc. are companies that are of a one and done model but are very tech heavy. And this is a subset of the one and done model. Companies that need a certain amount of money to get to a tech milestone that is important, but from that tech milestone, they can get the cash flow. So those are the companies that we think offer the best risk-reward ratio. And if you look at some studies that have been completed by the Angel Capital Association, some studies that have been completed by Price Waterhouse, these one and done companies are ones that have had by far the best investment return of any angel investing class. In fact, some studies show that class of angel investing has shown average returns of over 50% annually over the past 10 years. So look for those one and done companies, look for technology, and that's a key success strategy for angel investing. For more angel investing trends and ideas, go to www.angelinvestingsecrets.com. Once again, that's www.angelinvestingsecrets.com.